Hey there. So Elon Musk replied to my tweet about Tesla versus Rivian. This is the first time this has happened. It is exciting to have one of the world's most influential people commenting on your tweet. This video, I want to break down what he shared or what he replied, what my initial tweets were about Rivian, and then share a little more color and analysis on those tweets and what he said in response. If you're wondering why I have a bag on my head, make sure to check out the introduction video. I'll link it here above. So let's jump over to those tweets. Tweeted these out about a week ago when Rivian had their Q4 results. And this one actually was more popular, so I'll show it here first. It said Tesla Q4 deliveries, 308,000 versus 900 for Rivian. Their auto gross margins of about 31% versus minus 700%, and an operating expenses of 2.2 billion versus 2.1 billion for Rivian. And then I also put this tweet, embedded it in here, tweeted it soon after, because some people were saying, well, compare Rivian versus Tesla when Tesla was ramping their production. And this is the one that Elon actually replied to. And here's what I said. I said, Tesla Q2 2011 versus Rivian Q4 2021, sort of soon after they both IPO'd. Of course, you can't exactly compare, and there's not a lot of data for Rivian, so I just picked their most recent quarter where they had some production and they're ramping things. So auto revenue for Tesla, 39 million versus 54 for Rivian, both relatively small, trying to point that out. Gross margin at the time, auto gross margin still 22% for Tesla. It's really actually positive, not bad. But minus 700% for Rivian. So crazy negative automotive gross margin. And then operating expenses of 77 million versus over $2 billion for Rivian in operating expenses as they're trying to scale up advertising and sales people, and R&D is included in that too. I think R&D was like over 700 million in that. So obviously tons they're spending on R&D, and then net losses of 59 million versus 2.4 billion overall for this quarter, when Tesla was earlier in the ramp in 2011 versus Rivian right now in this ramp as well. And then Elon replied to me. He said, prototypes are easy, production is hard. Making an electric car that was not the hard part of Tesla. Dozens of companies have done that. And then he also said, but reaching volume production with sustained positive cash flow was last achieved by an American car company, Chrysler, about 100 years ago. Ford and Tesla are the only American car companies to avoid bankruptcy. Even GM and Chrysler went bankrupt in 2009. The main point I wanted to make with my tweets about Tesla versus Rivian was that the operating expenses of Rivian are insane. And their gross margin, they're just overall ramping expenses are insane. It makes sense on the one hand. I can see it makes sense for Rivian to really go big, since Tesla has paved the way already and given confidence to investors and other companies that electric vehicles can be successful and can be extremely profitable. So they're kind of they have a path paved ahead of them that shows really just spend the cash, raise the money, go big. I think Rivian has like 18 billion or so. I forget the number offhand. It's in that range, I believe, in cash on hand. So really, they're just willing to spend, even losing up to 2.5 billion in one single quarter, to just pave the way, make the cars, get it done, no matter what. That's sort of on the one hand, one perspective you can take. But on the other hand, it's insane the amount of money that Rivian is losing right now. Their operating expenses right now are on par with Tesla's, even though Tesla is doing, about 1 million more vehicles per year than them. And this is the highest Tesla's operating expenses have ever been. This is sort of the historical high, even as they're producing as many vehicles as they are and opening 2 factories in the world right now. And certainly in the earlier years, when Tesla was just ramping their vehicle production, their operating expenses were just a fraction of what they are now, or what Rivian's are now. So my main point with these tweets was to highlight the extreme amount that Rivian is spending. In my opinion, it's not a great look. It's not a great sign for Rivian. It shows me that there's probably lots of sort of mismanagement of capital and mismanagement of details in general as they aggressively throw capital at problems. Certainly not every dollar. I hate it when people compare sort of operating R&D spend between companies and they say whoever has the biggest budget must be doing the most profitable or most valuable R&D spend. what you should really realize is that every dollar spent in any way that it's spent, no matter how it is, R&D we're looking at right now, is not equal across companies or across organizations. There could be one organization that spends $1 billion in R&D and is another one that spends $500 million in R&D, and the $500 million might still be 10 times the value output of somebody, even though they maybe spent half as much as somebody else. So the dollars, the amount of value you're actually creating, you have to look a lot deeper than just the amount of dollars you're actually spending to see what the value stream, what you're actually getting for those dollars. And so, my opinion, not a great sign. Rivian's just burning through so much capital so early on. And some of this sort of detail, when you think about sort of what's beyond just the headline numbers and what's the details below that, I think it ties in with Elon's point that he's made this point many times, that it's easy to make a prototype or do something one or a handful of times. It's much, much, much harder, much more difficult to make a detailed, intricate product like a car at a high volume and make it reliably, not even just now or coming off the lot or coming to the customer's hands, not even in the first year, but maybe even reliably for the next 8 years at least of warranty, and then even beyond that for the reputation of the company in vehicles as well. Like for the next maybe 20 years, it reliably can service and drive. Super difficult problem to make that kind of vehicle profitable, make that kind of business profitable, successful in that. So, and my own experience, I'm a manufacturing engineer. I worked at a relatively low volume production facility that made farm equipment for several years. I was in the manufacturing engineering group, and we tried to iron out details at all levels of production. I can assure you it's extremely difficult to make a new product come through a line like that successfully and reliably, even at relatively low volumes. Like the company I was working with, was a really small company that did maybe a few hundred units of a certain model in a year. So let alone that few hundred units, maybe over a month time or whatever, maybe 10 a day for a month, and you have 300 units. That's one problem, let alone working up to what Tesla and other vehicle manufacturers are trying to do, which is 1,000 to 2,000 vehicles or more per day out of a plant, even orders of magnitude more difficult than the problems I kind of was working on in this farm equipment facility. So extremely difficult. And I was trying to even think of a good metaphor to explain how difficult I think it is. This doesn't even really capture it, but it gives you some idea that I think people can relate to. The analogy is exercise and fitness. You often see people get really gung-ho and excited to exercise and be more fit, and they show that enthusiasm to the world. They get the right exercise clothes, they get a treadmill in their house, they buy running shoes, they join a gym, they tell their friends, this is their New Year's resolution. They're going to exercise more and get in better shape. They have lots of enthusiasm to exercise. Yeah. But then after a few weeks of actually exercising, that's the actual difficult part. Actually exercising, they feel tired and the enthusiasm is gone, and they, rather than getting up early to go to a gym before they go to work, they sleep in because it's a lot more easier and convenient and comfortable to do that. And going into to the gym or going on that treadmill, it isn't really novel or fresh anymore. It feels like more of a difficult chore. It's easy then for them to start skipping days, stop exercising, and their enthusiasm fizzles out, and so does, in the end, their actual exercise and fitness goals and hopes. And it's a similar in a complex organization of trying to manufacture vehicles at scale. And it's easy, big company like that, to show lots of gung-ho and go-getter attitude to the world. It's much harder to be disciplined and methodically work through problems and have staff at all levels communicating and problem solving together. To me, that is the real detailed hard work of creating a functioning supply chain, a value chain that adds value and contributes value to make a functional product. This is like actually doing the exercise in the exercise analogy. It's like actually day in and day out exercising and doing the actual hard work, doing the actual work. So it's, in my mind, it's easy to talk. It's so much harder to stick with something and be disciplined through it and see something through to its success. Somehow, back in 2018, I just knew in my bones I felt Tesla would successfully ramp their production. Turned out I was right. Of course, nothing is certain, but I really thought it was likely they would come through. I just think maybe it was their extreme focus, the leadership of Elon, the discipline they had, and the lead and the push they were making into an EV space, which has a lot of tailwinds behind it, the EV space in general, gave me confidence they would make it. But for many other EV makers now, following that success, following the sort of path that Tesla's already charging, I'm a lot more skeptical whether they're going to actually be able to scale production and stay in business and be successful. Really not so sure on a lot of those companies, Rivian being one example. Love to hear what you think about production challenges. What do you think about even Rivian and these tweets? Let me know in the comments down below. You can follow me on Twitter at PaperBagInvest. Make sure to subscribe if you get value out of this. And remember, it's in the bag.